Well, friends, Jagannatha Rana here. So, product of the day is public liability non-industrial insurance. Public liability non-industrial insurance. Say, public liability section has many insurance policies. In fact, we can say the liability vertical has many insurance policies which covers the liabilities of the policyholders. So if a policy called public liability non-industrial insurance is required, it has to be seen what for the policy is being taken. Because the coverage of the policy is to compensate against the legal liability to persons, firms, associations, companies which own, operate or engage in commercial activities and seek to protect the third party bodily injury and property damage and defense cost within the specified limit stated in the policy schedule. But it excludes pollution, however caused unless specifically covered, and product. Means the liability related to pollution and the product is not part of the public liability non-industrial insurance policy. And coverage is very clear, but these are not covered under the policy. As far as add-on covers are concerned, plenty of add-on covers are there, and further add-on covers are depending upon the number of add-on covers depend upon the insurer to insurer. Because as per requirement, they are getting the add-on covers approved. But the normal add-on covers available with the public liability non-industrial insurance policy are, say, first notification extension cover, or you can say notification extension clause. So if the insured notifies the company during the policy period of any specific event or circumstances which the company accepts may give rise to a claim or claims which form the subject of indemnity by this policy, then the acceptance of such notification means that the company will deal with such claim or claims as if they had first been made against the insured during the policy period within 3 years from the date of such notice to the company. Second one is extended claim reporting clause. If the policy is not renewed or cancelled, the company will provide the insured an extension of 90 days from the date of expiry or cancellation for notification of claims, provided that the claims have arisen within the policy period. A third one is care, control and custody extension. This clause covers the insured against legal liability to pay consequent upon any injury and or damage to the valuable of the residents, bona fide guests, while such valuables are in the care, control and custody of the insured in the premises. The next one is extra facilities extension. So extra facilities extension means it covers the insured against the legal liability to pay consequent upon any injury and or damage to the valuables of the residents or bona fide guests, while such valuables are in the care, control and custody of the insured in the premises. The next one is extra facility extension. This covers the insured against legal liability to pay consequent upon any injury or damage arising out of the use of the facilities, for example, lift, swimming pool, spa, gymnasium, salon, valet parking arising out of the accidents, including accidents arising out of the contamination of water in the insured premises. And the last one is food and beverage extension. This extension covers the insured against legal liability to pay consequent upon any injury or damage arising out of the poisoning by a foreign or deleterious matter in food, beverages, and any edible item supplied by or on behalf of the insured. Limit of indemnity will be on AOA and AOY basis, means any one accident and any 1 year. So the any one accident opted by the customer, the limit of liability for a claim or series of claim arising out of any one accidents will be based on the any one accident, and any 1 year means maximum 4 times that of any one accident limit. The limit of liability for one or more accidents occurring during the policy period would be applicable. Then the compulsory deductible is also there. This is 0.5% of each accident limit subject to a minimum of rupees 1,000 or as per the cover of the insurer. Voluntary access provision is also there. The access opted by the insured cover and above the compulsory access will be eligible for discounts in premiums. As far as premium rate is concerned, the basic cover is 5 rupees per mille. Notification extension clause inbuilt cover is nil. Extended claim reporting clause inbuilt cover is nil. Food and beverage extension 5 rupees per mille. Care control and custody rider 5 rupees per mille. Extra facilities extension 5 rupees per mille. But since the market is price free, these tariff rates are not applicable nowadays. Whatever discount the insurer want, they can give, and they can charge the premium rate according to their underwriting practices. But the policy does not cover the risk of pollution, house overcost unless specifically declared, arising out of any product, loss arising out of any product, assumed by the insured by agreement or arrangement, and which would not have been attached in the absence of such arrangement or agreement. Losses arising out of act of God perils. Then deliberate, willful non-compliance with any demand, judicial or statutory law, order, request, or requirement of any authority. Any loss arising out of a pure financial nature, including but not limited to loss of goodwill or loss of market. Or further, the fines, penalties, punitive or exemplary damages of any other damage resulting from the multiplication of compensatory damages. Then the underwriting guidelines of the insurers are important, because every underwriter will consider claim experience, favorable features, existing fire extinguishing appliances, housekeeping, security arrangement, alert mechanism, compliance with statutory requirements, and the attitude of management. So the target segment for this policy are risk like offices, hotels, residential societies, shops, places of worship, automobile dealers, workshops, clubs and associations would be the preferred segment for writing this business. Say for example, occupancy is hotel. In that case, how the cover will be given? Say limit selected by the proposer is any one exchange limit is, say for example, 50 lakh rupees. Any 1 year limit is 10 crore rupees. So base rate will apply on this 10 crore. Then factor discount and ratio between AOA and AOY, that is 1.2 or 1.4. It cannot be 1.4, more than 1.4. Then food and beverage extension, care control or custody rider, extra facilities extension, then gross premium, underwriting discount, and thereafter tax as per the practice, that is 18% today. So it is as per the choice of the insurers. They can have the decline risk also, because some insurance companies are not accepting the proposals of pharmaceutical companies, asbestos manufacturing companies, exhibitions, cinema halls or theatres. But this is as per the discretion of the insurers, because they are all subject to insurance. So all fields of proposal form should be filled in, because the necessary information is required from the proposer only. Manufacturing and hazardous activities are not covered under the policy. They have to be declared. Limit of indemnity and the ratio between any one accident and any 1 year have to be declared. And then the past loss history, that is most important. So basically this public liability non-industrial insurance is to compensate against the legal liability to person or firms or associations or companies which own, operate or engage in commercial activities and seek to protect the third party bodily injury and property damage and defense cost within the specified limits stated in the policy schedule. But under no circumstances the pollution liability and product liability are covered, because for them there is a separate policy. Thank you very much.